Investors are awaiting the next phase of Trump's trade war as his 90-day tariff pause on several economies expires next week. So for more on what's ahead for markets, I'm joined by Thomas Hayes, the chairman of Great Hill Capital. Thank you for joining me, Thomas. Let's start with the US market. What's driving these gains?
Well, Katie, first off, thanks for having me. Markets climb a wall of worry. We've basically gone from tariffs and bombs to tax cuts and growth, and the market is focused on the latter, not the former. Sentiment, you've got so many institutional managers offside. If you look at the most recent Bank of America fund manager survey, sentiment is still near COVID low levels and great financial crisis low levels. So every bit of good news is going to push the markets higher. And finally, we're going into earnings season with very low expectations of 5% earnings growth. That's down from 9.3 just at the end of March. So it sets the stage to force all of these managers who sold at the lows in early April. It's going to continue to force them back in because they've simply been offsides.
Fascinating that you say there's a lot of pessimism in the market, but yet we're seeing any sign of optimism pushing up the market. How much is President Trump's big, beautiful bill, as he's called it? You mentioned that fiscal stimulus. How much do you think that is furthering the market forward?
Yeah, there's no question about it. It's all about growth and deregulation and increasing GDP. The tax cuts are good for companies' earnings. We're seeing real wages rise again for the working class people in America. So a lot of the policies are really being well received by the markets, well received by companies. And you know what's coming back more than ever is CEO and C-suite confidence, which had been in an abysmal level in the first quarter and going into April. Now they're starting, animal spirits are coming back. You're seeing deals, you're seeing investment, you're seeing planning now that they understand better the rules of the road going forward. And they're seeing some flexibility and rationality. And then you couple that with global liquidity, M2 money supply at an all-time high. It had been flatlining since 2022. And we had 64 central bank rate cuts last month, not one out of the US, but 64 globally year to date, rather, and 15 last month alone around the world. Again, none out of the US. So we're pretty hopeful seeing some of these Fed members come out against Powell, whether it's Bowen or Goolsbee or Waller, indicating that maybe earlier, if the inflation numbers continue to show positive signs, maybe they go in June as a surprise, but certainly the odds of September have gone up for a cut.
You mentioned wage rises as part of that beautiful bill, but of course we are going to, well, big part of the contentions is the cuts to Medicaid. Another interesting element there, of course, is President Trump's pledge to reduce taxes on service workers. Thank you for joining me, Thomas Hayes, chairman of Great Hill Capital. And Thomas, of course, mentioned the Fed. We've also seen Donald Trump continuing to extend his attack against the Federal Reserve's chair, Jerome Powell.